Well, thank you, Gilbert, and welcome everybody who is on the conference today. My name is Brett Richards. I'm the CEO of Goldshore Resources. As usual, we have to draw your attention to the disclaimers, and you can find these on our website for your review. Goldshore is a fairly new company. We've been listed since June the 4th. We did a deal back in January of 2021 to acquire the Moss Lake Gold Mine from Wesdome Gold Mines, and that transaction was for $52 million in cash and shares. And subsequent to that, we went to the market and raised $25 million of fresh capital to support the transaction and to support the development of the project. Those transactions sat in abeyance until the TSX approved it, and they were approved on May 31st, and we were admitted for trading on June the 4th. But the highlights here are quite simple. We've put together a very, very top quality management team and board with deep experience and proven track records in this space. And this is the driver behind I'll say, getting the awareness of Goldshore out there, because ultimately what we're trying to do is create the next tier 1 asset in Ontario. And when I mean tier 1 asset, that is defined by several majors. We're 10 million ounces, 10-year life of mine, average production annually of over 500,000 ounces, and being in the lower half of the cost curve. That's the framework for a tier 1 asset. That's what the majors look for as they deplete their reserves and they look for new projects. Our project is in Ontario. It's in northwestern Ontario, about 100 kilometers west of Thunder Bay. And we have a 4 million ounce historical resource that we are going to prove up, expand upon. And this 4 million ounces occurs in a 2.5 kilometer section of a 20 kilometer known mineralized trend. So we have a lot of size, a lot of scale, a lot of potential, and we need to prove it. So back in the spring of last year and summer, we put together a very large drill program, 100,000 meters, which we started in the fall and we are working on today. And then I'm going to talk a little bit about the historic PEA, which was done in 2013 and updated in 2020 because it has extremely robust economics in today's climate. And this is our starting point. We're going to build upon this base. As I said, we had purchased the Moss Lake deposit, the Moss Lake project for $52 million, 12.5 in cash, and $19.5 million were paid in shares to Wesdome on the transaction. And there's $20 million of progress payment share to be made over the next several years. I think projects all start about people. I've been in this business 35 years. I was a very early stage cutting my teeth at a company called Kinross, one of the founders of Katanga Mining in the DRC, where we made our shareholders 86 times money. And I was also the CEO of Rocks Gold and the CEO of Avocet, London listed company, where we did our shareholders 6 times money in 3 years. Peter Flindell is my VP of exploration. He's been with me for the last 20 years on the last 10 projects. He's a very prolific senior geologist, and we have parked him in Thunder Bay. He now lives in Thunder Bay. And that is really our key staff. We have a very, very lean management group, and we intend to keep it that way. We have a very, very strong board of directors, and we've put the strength of all of these people together to assist me in getting the awareness out of Goldshore. This is one of the preeminent gold stories, I think, in the marketplace today because of its size and its scale and its potential. And we've got a mixture here of extremely successful CEOs, all in their own right, of a number of precious metal and base metal companies in Canada and globally, including Victor and some Wesdome appointees. As well, we have Joanna Pearson, who is with Endeavour. So extremely, extremely strong board. But the depth keeps going. We have very, very familiar names on our strategic advisory board, led by David Garofalo, the former CEO of Gold Corp and the current CEO of Gold Royalties Limited, and also Craig Perry, former CEO of ISO and Skeena, Brian Sluserchuk of K92. The list goes on. And again, I use these guys as my extension of my network. This is where the project is. It is in northwestern Ontario, about 100 kilometers west of Thunder Bay. And this is a low-grade bulk tonnage deposition. This is exactly like Detour Lake. And if anybody followed Detour Lake, they started with 4 million ounces, as we have 4 million ounces. They took this because of the size of their land package. They took this up to 20 million ounces where they were acquired by Kirkland Lake. And Kirkland Lake took this up to 30 million ounces where they were merged with Agnico Eagle back in November of this past year. There's been a lot of history, including an operating mine on our property. Wesdome bolted on 2 properties, Coldstream and Hamlin, back in 2016, and you know that North Coldstream Mine ran for 12 years, from 1980 to 1992. This is our resource statement. We currently have 1.5 million ounces in indicated and 2.5 million ounces in inferred. This is our land package. We are on the Trans-Canada Highway. We are on Yonge Street in Toronto. You can get on Yonge Street and drive 1,800 kilometers and be at our site in probably 2 days. But the purpose of this slide is twofold. We are near every piece of available infrastructure we would need to build a big project here. We have water, we have roads, we have rail spurs just off our property. We have very cheap grid power from Ontario Hydro, 10-cent kilowatt-hour power. We have natural gas and extensive, I'll say, resources available in Thunder Bay, which is 100 kilometers away. So this is prime for building a big project. This is our land package, toe to toe, corner to corner. It is around 40 kilometers long. And again, this white dotted line illustrates the known mineralization along strike. And we also have 2 big copper expressions at either end of our land package down here, known as Hamlin Lake, and up in the Coldstream district, we have Coldstream and Iris Lake. And they're, you know, a little bit different in what Moss Lake is. You can see the historic grades here. Moss Lake is a disseminated gold deposit around 1.2, 1.3 grams over big intercepts of 150, 160 meters. And Iris and Coldstream and Hamlin are different. They are copper expressions with gold byproducts, and in some cases quite strong. Iris has 250 grams over, you know, half a meter. There's some very, very high grade gold vein systems within the VMS deposit here. And Hamlin's an IOCG style deposit. So you're going to see kind of around 1 gram gold and 0.35% copper over big intercepts. We need to get drilling into these areas, but for the next 6 months, we are focused on Moss Lake. These are some of the first drill holes. This yellow area here is the historic resource, and you can see the mineralization goes down substantially below here at depth and substantially laterally. We are going to be able to expand the size of this resource in every direction, which is encouraging because the mineralization at depth is quite significant. So 4 million ounces is going to be, you know, this is our starting point. We are going to take it up from there. And we're getting good correlation, some near surface mineralization, as you can see here, from 4 meters at surface. So very good correlation to the historic model. We've built quite a bit of infrastructure up here. We spent several months putting together a core shack and core logging. We do core scanning, we do core photography, we do bulk density sampling, we do metallurgical prep for testing, and we have on-site accommodations for about 40 people. This is the historic resource. As I said, this is open in every direction. It's about 2.5 kilometers long, and we have 20 kilometers of known mineralization. You can see the known mineralization from the VTEM survey we flew. You can see it in the inset here. There are lines that go to the northeast and drill holes that go to the southwest, and they're all mineralized. For us, what we need to do is pull all of this into a new resource and test the dynamics of this potential size all the way over to this big banded iron formation to the northwest. So this is a really, really exciting opportunity. There's going to be lots of opportunity for resource growth here. The second takeaway on this diagram is the big carbon expressions at Coldstream and Hamlin, and I've had to move the actual bullets off them so we can see where the carbon expression is. But these are high-grade copper prospects that we need to test, and we could possibly do a spin-out company if these prove to be worthy of that. We'll look at that strategically, maybe in about a year's time. We're focused on Moss Lake right now. We need to get Moss Lake to 10 million ounces. This is our drill program. We've got a 100,000 meter program planned for this year. We'll get through the entire program, and we've got 4 rigs running today. We'll have a 5th rig running soon, and our intentions are to complete this program. Here you can see where we have prioritized about 130 or 140,000 meters here. We'll get through the first 100,000 meters of priority. And then what we'll look at doing is we'll update our mineral resource inventory. And then we will update the PEA, which is the preliminary economic analysis. While we do that, we'll be updating the metallurgical test work so we can increase recoveries. And along the way, we'll be continuing on developing our ESG relationships with our First Nations. We expect to have an exploration agreement in place in about a month's time. And we will continue on with our environmental baseline study. And all of these things provide the backdrop for a project. This isn't about a drill campaign and put the results in the market. This is about building a tier 1 asset at the project level. This is the historic PEA. It's very simple. It's 3 million ounce input, 2.5 million ounces output, 10-year mine life, $900 cash costs with a very, very big production profile. And if you go back and look at the tier 1 asset criteria, it's 10 million ounces, it's 500,000 ounce production profile, it's 10-year mine life and $900 cash costs. And you will see that we are very, very close. If we add significant amount of ounces here, we will very much look at achieving that tier 1 status. Those inputs come out with these outputs. This project, as it stands today, before we add any ounces to this, has a $572 million NPV. That's almost $600 million NPV. And companies like ours trade at 0.3 times NPV. That's a $180 million market cap. Today, we're at $50 million. So substantial growth potential to do a valuation re-rating to our project economics. And those are the ones we start with, not the ones we aspire to in 12 months' time. So lots of upside in our share price from where we are today. I also look at this, trading comparables as a good valuation metric. And the average of our peer group is $45 an ounce. It costs you $30 to find ounces in a greenfield scenario, and we're trading at $15 an ounce. We're trading, on this multiple for a number of reasons. First, let's look at the macro picture for gold. You've got quantitative easing and the printing of money in the US that's not stopping. You've got $30 trillion of debt running a $3 trillion deficit every year in their budget. And you've got real rates of return that are negative, in the bond sector. The 10-year bond at 1.65 delivers a real interest rate of minus 2.5% today. So you give the US federal government $10,000 for a 10-year bond, and in 10 years' time, you get $6,170 back in buying power 10 years later, and you take the credit risk along the way. That is a scenario that is just not sustainable. And compounding that, and the reason for the negative real interest rates is inflation. We saw 6.8% in Q3 of last year, 5% in Q4. We're seeing 4% every quarter this year. So you're now going to start and see rotation of capital, leave asset classes that are impacted by inflation. You're going to see consumer packaged goods and consumer discretionary and telecommunications and industrials, heavy industrials, hotel, beverage, those sectors that enjoyed 15%, 16%, 17% returns last year are going to be on their Q4 earnings calls or their Q1 earnings calls are going to have negative numbers, and people are going to leave. I recall last fall, nobody cared about gold. Nobody cared about gold equities. They cared about those sectors I just mentioned because they were delivering 15% returns. They are no longer going to do that. We are going to see a sea change, a tidal shift of capital coming into natural resources, specifically gold, as a safe haven or as a hedge to inflation. Haven't even talked about the impact of what we call black swan events, which are the pandemic, the lockdown 1, 2, 3, 4, the variants, Alpha, Delta, Omicron, soon to be Epsilon. They are going to continue, and they are going to put strains on governments. And then on top of it all, you have what I call U.S. political chaos. They can't get anything done. They fight amongst themselves, and it creates a lot of instability. Even though the market is still warm and still moving in the right direction, we are in for this sea change of, I'll say, economic focus, which is going to be on gold. So you've seen two valuation metrics, on certainly on the NPV, trading factors on NPV. You see trading comparables to our peer group, and you can see transaction comps where, you've got Detour and Cote Lake. Detour's traded for $700 an ounce, and most recently merged with Agnico on a pro rata basis. They were valued at $338 an ounce, which is quite meaningful when we look at what our strategy is. And our strategy is to build a big resource and look at somebody to come in to partner with to build it. I want to give my shareholders an off-ramp. I want to give them a liquidity event, and I plan to do that when we get through this program in 18 months. If you look at our cap structure, we've got about a third of our shares trading. The balance are held in escrow, and 51% of this company is held by Wesdome and insiders. We all wrote big checks to get into it. I wrote a big check to get into this company, and I believe in this story. It is one of the most profound gold stories that there are available. And we have around $15 million of cash in the bank today, and we're burning about $1.5 million a month. So we've got adequate capital. This is, as I said, one of the preeminent gold stories in the space today. We've got one of the strongest management boards and advisory boards that I've ever worked with and that I've ever seen to put together for a company of this nature. We are in Ontario, and after working 12 years in Africa, Ontario is a breath of fresh air. We have a 4 million ounce historic deposit with a 20-kilometer known mineralization and two very big high-grade copper prospects that we are going to test over the next 12 months. We're doing that through a 100,000-meter program, and quite frankly, you assemble all that. We've got very, very good, attractive starting economics and very, very tight cap structure. So I think Goldshore is well positioned to deliver significant returns to its shareholders. So I will wrap up there, and I'm happy to take some Q&A.
Thank you, Brett. So just a couple of questions that we can squeeze in here. The first one from Javin. Who provides the technical expertise in your team?
So the technical expertise in our team comes from Peter Flindell. He has a team of about 30 senior and junior geologists that work at site in Moss Lake, and geotechs that run our drill program on his leadership and on his direction.
Great. Final question here from JGA. What is your relation with the First Nation so far, or is there any concern?
We engaged with our First Nation from day one, and we have 4 known Indigenous First Nations affiliated partners. No one actually has a band on our property, and the closest one is about 150 kilometers away. but they have historical rights to trapping and hunting in our area. And we felt it was imperative not just to engage with them, but to keep them as part of our stakeholder group, keep them up to speed on everything. And we're going to be entering into an exploration agreement with one of our First Nations host communities to provide them with a number of things: jobs, economic stimulation, and first right of refusal on contracts that they can be competitive with. And we're already doing it. Our environmental baseline company that's doing the baseline study is a company called CSL. They are affiliated with Lac de Mille Lacs First Nations, who is our affiliate. So we give them these opportunities because it's the right thing to do, and we engage with them and include them on most everything we do.
Great, these are very well answered. Thank you, Brad, for your time here today with us.
Thank you. Thanks, everyone, and appreciate the time.